Alright guys, this is the AMC video for just the Meme Stock Watch subscribers. Before we start, I want to talk about two things quickly. One of them, today was the last time I will ever post a public forecast before it happens. From now on, any forecasts that I have on AMC, GME, any other thing will only be on memestockwatch.com. I just wanted to give the public one last opportunity to understand, how we forecast stocks, and if it's something they like, they can choose to sign up, otherwise not. But from now on, any forecast will only be on here. And if they're right or if they're wrong, I may post them afterwards when it's too late to take any action on them. So that's number one. Number two is that everyone should understand I am not a financial advisor. I do not give financial advice. I will never tell anyone to buy or sell a security or an option or anything like that. I simply give forecasts on where I think price is going. And once in a while, if I'm personally going to take a position, then I personally will, make a post about it. I personally am taking a position. If you don't have great experience in options and if you don't fully understand options, I would never recommend them to anyone, but I still think you guys could find value by just, seeing the way we forecast the market and maybe one day doing it yourselves, or if it even helps your investment to know where price is going, anything like that. But I will never, ever, ever tell anybody to buy options. Any options that anyone buys is their own risk, their own reward, whether it goes right or whether it goes wrong. Only them can be blamed for the options that they buy. I simply, do my best to forecast the market and give a heads up when I personally take a position. So I just wanted to talk about two call buying strategies in this where AMC currently is right now. And here they are. So there's two trades here. There's one trade, which is I would buy options right here. Obviously, when I say buy options, I don't mean weeklies. I don't mean 2 weeks out. I mean I give myself plenty of time on my options so that if I get stopped out, I barely take a loss. So the first play for me would be to buy options right here at open on Monday, or wait a half hour, whatever. Wait till the initial opening calms down a bit because it might be wild in the beginning. But I would take a position right here and have my stop loss below 468. So I'm risking really less than 10% on the entire trade if it would go wrong. That's my first trade. Entering calls sometime on Monday, and my stop loss will be below 468. It also lines up with where the hourly trigger is, and I never want to be in calls when price is below the hourly trigger. That's actually why I accidentally got stopped out here, but I always stop out with my rules, whether it helps me or it doesn't help me, because in the long run, I know it'll help me. Even if sometimes I stop out and then I get screwed, in the long run, trust me, it's what makes me a successful trader, following my rules. So that's the first trade. Enter in this range with a stop loss below 468. That's the first trade for me. The second trade is more of a patient trade. And what I mean by this is I would wait until the hourly trigger crosses above the daily trigger. So if I see the hourly trigger cross above the daily trigger like this, then usually to me, that confirms a move up to the weekly trigger. So let's just draw this out for you guys. I don't know why I deleted it. I already had it up, but whatever. Okay, so once we have these bullish crosses, I've showed you guys plenty of times that when you have the hourly trigger, daily trigger cross, price, even if price, moves higher here, moves up, trigger cross, even if we have a retest, usually price will make its way to its weekly trigger. And I could give you guys thousands of examples, but I'm not going to do that in this video. Just something here, I'll give you just one example really quick. GME, bullish trigger cross, hourly trigger crosses the daily trigger, and price moves up to the weekly trigger. One more example we'll do, Tesla, bullish trigger cross, hourly trigger crosses above the daily trigger, and price moves up to the weekly trigger. So, I'd say for AMC, you're probably like around here. So what I mean by that is that I can either take a position right now and hope that price breaks through the daily trigger and then the hourly trigger crosses above the daily trigger, or I can wait until I have full confirmation, and then once I have this trigger cross, I'll enter my calls and ride it up here. Now I will say, I just want to talk about all the bullish things that we see right now, why I'm even interested in the options position. One, the daily velocity is rapidly decreasing, the negative daily velocity, meaning that we actually have a shot of breaking above this trigger here. The second thing that I want to talk about is LDPM, and I'm going to do this really quickly for you guys because I don't want this video to be long. So watch this. All right, we're going to go to the 1 day, take away the triggers, bring on LDPM. I'm just going to do a quick demonstration for you guys about LDPM being below price. Okay, so just bear with me 2 seconds while I clear up the chart, and then we're going to do a quick demonstration. So let's even things out. All right, now all we're going to do is take a look at what happens when LDPM moves below price, showing great liquidity, which is what we're currently working with. All right, so daily LDPM is below price. So let's take a look. We're just going to take out our handy tool here, price range, and we're going to start from, let's start from right here. So here, LDPM moves below price, and price moves up 66%. Over here, LDPM moves below price, and price moves up 67%. Over here, LDPM moves below price, and price moves up 39%. LDPM moves below price, price moves up 67%. LDPM here moves below price. You can see for 4 days it stagnates, but then finally rips to the upside and price moved up 27%. One more time here, LDPM moved below price and price moved up 15%. And then the last one, LDPM moved below price and price moved up 22%. So as you guys can see, when LDPM moves below price, it provides a nice risk-reward opportunity for calls. Now, I never really like risking my money on calls unless things look really good. So for AMC currently, over here when LDPM moved below price, it took 4 days, 1, 2, 3, 4, but eventually, with good liquidity, price moved higher. And we have the same thing kind of here. LDPM moved below price, we had 1, 2, 3, 4, and now it seems like price is trying to move higher. So that's the first bullish data point that I have going into my AMC position on Monday. My second bullish data point is this bullish VOX pattern, which is the coiling pattern, and VOX, we've been talking about this all week, VOX has finally moved above the lower black line, signaling that a rally is starting. We also have bullish snap graphs, and we also saw a 960% increase in bought calls on Friday. The only thing I'm concerned about here a little bit is the selling pressure above, meaning it may not be easy for price to just explode to the upside, and we have to expect severe resistance in this 550 range, which we know about anyway, thanks to the weekly trigger at 555. I plan on selling any contracts before price hits this, if it is going to go there, because, again, like I just showed, that's where the steep selling pressure comes in, unless something significantly changes. But for now, the plan is for me to just ride this up to the weekly trigger and then talk from there, if we can get there. So based on everything that I just showed, it provides good opportunity for me in terms of risk and reward. For me, the reward here outweighs the risk. The risk is pretty small. I'm entering with a tight 10 cents invalidation. And even if I would enter once the hourly trigger crosses above the daily trigger, I could enter after the trigger cross and then with a stop loss below the daily trigger at 490. So let's say I enter here at $5, I still only have a 10 cents invalidation. So those are the two entries for me. Each of them, I don't think I can lose any more than 10% of my position. So even if all of this work that we put in to forecast this rally is completely wrong, I'll only lose 10%. And if it's right, there's a lot of money to be made on this upside move. So that's the video for you guys. Everyone can only make their own financial decisions for themselves. I'm just saying what I see and what I plan on doing. So enjoy, best of luck, and hopefully this week proves our bull thesis right.